Rick, we're back, man. Yeah. Podcast number 2.
Yeah.
It's been a little while. I know that you and I have been really busy on a conundrum of different things, and finally finding a little bit of wrinkle in time to actually talk about some very pertinent information out there today.
Yeah, things keep moving, things keep changing, and a lot of this information isn't just out there for people to know about. So it's always good for us to get this stuff out to people so that they're aware of things they could be subject to.
Absolutely. I mean, I think at the end of the day, what Rick and I, what we're trying to accomplish is we're just trying to educate the public. There's a lot of bad information that is out there. A lot of not even people that are CPAs, EAs, or even preparers that are just taking just one little nugget of information and kind of twisting the narrative, right, to make it sound like, oh, all these amazing opportunities to kind of, in a sense, frauding the system. Mm-hmm. And so we're here today just trying to kind of set the record straight, let everyone know what the rules are, and try to make this somewhat entertaining.
Sure.
By the way.
Absolutely.
All right. So we're going to kind of move along. And what we did is we created this PowerPoint that you, as the viewer, can also see in the background. We didn't do that on the first go around, but trying to do things a little bit different this way so it's easier for people to follow. So one of the things that's really new, and everybody's talking about it now, Rick, is the BOI, the new rules that's out there. Why don't you kind of go over a little bit of that, if you don't mind?
Sure. So this is a law that's actually been around for a couple of years and has been pushed out at least 2 years since it was passed for different reasons, but it has gone into effect for 2024, right? And so basically the BOI rules basically require any entity, DBA, business, if you have some sort of EIN or doing business as a whether you're a sole prop or all the way up to a C corp, you have a filing requirement now to file with the Department of FinCEN, who, for the most part, what they regulate is our financial currency, right? And mostly the financial crimes divisions. The big thing here is money laundering, right? There's been an influx of LLCs that have been created across the United States by foreign nationals in order to funnel money out of the country through money laundering schemes. And so what they're trying to do is crack down on this. But just like anything that the government does, they took a heavy hand.
They did.
They took a heavy hand and applied it to everyone. And so now everyone's paying the price for some bad actors.
Yeah. And so if you're not familiar with BOI, BOI stands for Beneficial Ownership Information. And as Rick was alluding to, it is required by the U.S. Department of Treasury Financial Crimes Network.
Yeah.
So like Rick said, there are new rules in place. And so these new rules for newly formed entities in 2024, I think what they had said is they wanted you to register within 30 days. Originally, has now been pushed out 90 days. If you already had a entity that was registered before 2024, it is now due by the end of this year. Is that correct?
That's correct.
And so, guys, I can't emphasize it enough. You want to make sure you get this in. Your CPA, your accountant should be able to prepare this for you. If they cannot, you might want to find another accountant. Yep. With that being said, realize it's not part of tax return software.
No, it's completely separate.
It is completely separate. I know that we've already prepared a few for some of our clients. Approximately around 6 pages. You have to kind of go through iterations of copies of driver's license and all pertinent information for owners per se on there. And it's a way that they can go back and tie everything back to who owns what.
Yeah, and to kind of back on that, be careful. I know a lot of attorneys are pushing this right now, that they will prepare it for any of the entities that they've created for their clients, especially if they're the registered agent or any of that nonsense. The problem with those things, of course, is if the attorney isn't up to date with your business. And this happens a lot where a person meets with an attorney 5 years ago, they form an LLC, and they haven't even talked to that attorney since then.
Yep.
And the attorney may not even know you've got a new partner in there, or you've moved from where you were 5 years ago.
Or you have an equity change as far as ownership because you have a threshold. If you're below that threshold, you don't have to report.
Yeah.
And so you now have an equity change of ownership, either a new equity owner or someone's amount is less than the required amount. And so you need to file an updated FinCEN report for those transactions that occur.
That's right. And so if those BOIs get filed and they're incorrect, you would be subject to the penalties that are there. But on top of that,
let's talk about some inactive entities and some that might not be before we talk to penalties. You okay with that?
Oh yeah, sure. Yeah. So from an inactive standpoint, it's 12 months, right? So if you haven't done business in your LLC, that means you haven't run money through a bank account. Mm-hmm. And I think it's $1,000.
Not engaging in any active business.
Correct. Then you're not required to file this. Okay. So basically, if you have an LLC that maybe you formed it a couple of years ago and you haven't really done anything with it, you don't have to file this report. You certainly can. You don't have to file the report if it's basically an inactive or a dead entity. But again, the threshold's $1,000, so that's not a lot. You may think, well, all I'm doing is just keeping it active. Maybe I pay my accountant to file the return every year, whatever. Well, if you spend more than $1,000 with your attorney or your accountant every year, that's an active business, regardless if it's zero income.
Yeah, and I'm going to take it one step further, Rick. I would say if you're uncertain on the matter, let's go ahead and file. Mm-hmm. Because here's the deal: if there's not a lot of changes or really any changes that necessitate the following year, you might have only had to file that 1 year.
Yeah,
and so it's done. It's over with. And you don't have to resurface it unless things change in your business. So I tend to lean on, let's go ahead and get it done. Let's be proactive.